the Magnificent Seven stocks have been coming down hard, and everybody wants to know, is this the bottom? Is it time for the stock market to go back up? Is it time for the Magnificent Seven to go back up specifically? And that's what we want to talk about, because as we know, they have absolutely been carrying the stock market in 2023. So we want to kind of get in depth on that. And Newski, if you don't mind, once it's ready to talk, let us know what the Magnificent Seven is, bro.
Yeah, so this is the main thing. Like, these are the biggest stocks everyone's talking about. So you got like the Microsoft, you got the Apples, you got the Nvidias, you got the Googles, you got the Metas, you got the Teslas, and then there's one more I'm forgetting right now. Amazon. So you got those seven. Those are the seven that have been carrying the entire market, right? So basically what Rel and I are talking about is, and this might be a strange look, and we're going to show you guys this in 1 second, but this is what you have to pay attention to. The other companies in the entire market have not been doing that well. Not at all. And Rel has showed you guys this on the chart before. And that means these 7 companies are basically holding up the entire market. So if something happens to these 7 companies, what will happen to the stock market? And this is the thing we want to show you guys here. So let's just, and mind you, it's not our tweet. Like, I don't want to say, how do you pronounce this, bro?
BC, I don't even know.
Yeah, Kobe C. Yeah, no disrespect whatsoever. Like, this is a tweet that we found here. And this just goes, basically saying that the breaking news, right? The S&P 500 has now lost $3.5 trillion in value since the Fed removed a recession from their forecast. The Fed marked the exact high in July 2023 with their no recession call. Since then, the S&P 500 is down 9% and just hit its lowest level since May 31st. And now it's saying we are 1% away from entering correction territory just as earnings season is beginning. So the question here is, did the Fed just mark the top of the market? This chart is showing you guys the S&P 500. And for those people who are not like just watching, if you can right now, I highly suggest you do, because it's great for the visual. Bro, it's basically showing you guys, Fed removes the recession warning up top right here, the circle. And then, bro, we literally just went down and down and down. Yeah. Now we're 1% away from the correction. Yeah. So I don't want to go too serious and make a joke about it, but like, bro, do they know what they're talking about?
Bro, real talk, it's like no one really trusts the Fed, first of all. It's like whatever they say, the market kind of does what it wants anyways. So, you would think that that's supposed to be technically bullish news, like, oh, no recession, all right, so the market should go up. But the way that I think investors are viewing it is the fact that if the Fed thinks that there's no recession, with these high rates, there's no reason to drop rates and overstimulate the economy to the point where we could spike inflation again. Because as we know, they're very adamant about getting inflation down to that 2% target, which we have yet to get to. We came down to about 3 and then pushed back up to 4. So it's like the Fed is kind of shaking out, you know what, maybe we should just keep rates this high because we're not entering a recession anyways. So the market, I think, is seeing that and saying, hey, if rates are going to be this high, do we want these companies at these multiples? Should we not want to kind of bring these companies back down to a value more fitting for a high interest rate environment, that higher for longer environment? I think that's why the market has been selling off.
That's such a hard concept to even understand when you think about it, right? It's like, oh, no recession warning, automatically you think it should go up. But then you're right. Investors are like, yo, 100%. If rates are not going to drop, these companies are not going to be able to sustain themselves for that long. And another thing I want to bring up, and if you guys have been watching this channel for a while, you guys know I'm very iffy on this, and I've been saying it for a minute now. I think the job employment numbers are completely wrong. This entire period, we've been seeing layoffs and layoffs and layoffs. Different industries are talking about it. Like it's on the quiet too. Like bankings we saw, tech we saw. Now we're seeing other industries like insurance companies that are struggling with stuff. You have just regular retail stores doing layoffs. It's like, bro, a lot of this is happening. And Raul, we talked about it earlier. What is the reason for stocks to go up right now? Like realistically thinking, what is the reason?
There's no real reason. I think there was a big bet on AI, and we've said this a while back. And it probably sounded kind of funny back then. Like, I think everybody's betting on AI, but I really think that was legitimately probably the reason for the rally. And I think everyone's coming back down to reality a little bit. And even something like unemployment has been low. and we may see an uptick in it over time. But I don't know. It's like I kind of look at like, bro, if people start losing their jobs, this could get very bad because delinquency rates are already starting to rise. They're not at alarming levels yet, but they are trending.
They weren't. You made a whole point on that. They weren't that bad.
Right, so far, but if unemployment picks up, delinquency rates are going to rise rapidly. They're already trending up, right? They're already trending up. So imagine we lose the employment hold that we have. It could get very bad, bro. Very bad. Because affordability on everything is at all-time low.
Oh, that's the all-time low. All-time low. It's very hard to just live life on a regular salary, regular income right now. But I agree.
So it's an affordability crisis. So imagine we lose jobs now. Bro, things could get very scary for this economy, bro.
Yeah, and I guess let's talk about this, right? So now what we want to transition to is essentially let's just talk about the big Magnificent Seven companies, and like we're not going to go tackle every single one of them, but here's some news on them, and then we're going to tell you why we personally think they're going to come down a little bit. There's probably some it's not 100% set in stone, but let's get into it. So if you haven't done so already, please make sure you like this video, subscribe to the channel, and comment any thoughts you have below. But let's just talk about it. So Microsoft and Amazon, that's the first one. I think everyone knows we love these companies, right? I think it's a fact out there. But it says Microsoft is in talks to sign on Amazon as a customer in a $1 billion cloud tool deal, which actually did end up happening. But just think about it. Like, they didn't comment too much on this, but this deal is around Microsoft's 365 cloud productivity tools. So, bro, let's just think about it, bro. If you are a competitor with Microsoft and you're in Amazon, do you want to give Microsoft money?
Nah.
You don't. But think about how good of a tool Microsoft must have for you to give them money. And it's not small money, bro. It's a $1 billion check.
Yeah, no, that's a fact. That's a testament to that 365.
Exactly. So if you think about it, it's like clearly Microsoft and Amazon are coming together. There's stuff happening, but it's like there's stuff that's going on in this world that, there's good news. However, it's like the rates are still high. The interest rates they're not dropping anytime low. Right? They're not dropping soon. So it's like, what's really happening? Then you look at Tesla. It says that Elon Musk's Tesla robot could be the next big win. Yes, it can, but other people are coming along. So it's like, what is so cool about this robot right now? Right? Like, what is it exactly solving? And other people are not going to be able to do that. Another thing with Tesla was, bro, like the Cybertruck. If you think about it, this looks terrible. I don't like how this looks. Do you like how this looks?
It looked like a toy car that a little kid made.
Legitimately, it's the ugliest thing, and it's giving competition though. Like, the main thing is, like, when you think about it, it's an electrical vehicle for sure, so it's going to be great on that sense. But it's really giving competition to like the F-150. You got the Rivian truck, you got the Chevy, like Ram, all these things. It's giving competition to that, so that's great. But we have to see how this rolls out and if people buy it or not. I think people are just going to jump on Tesla because it's Tesla. I think that's going to happen. But in the end of it, it's like there's clearly news around Tesla, and like, it's coming out. I think it's starting at $40,000 or so. So that's another thing that's going to happen. And then you got the Apple news where it says, and this is the funny part, Apple may be planning a surprise October iMac announcement. It's like, okay, cool. They're going to come out with a new, I think it's M3 chip now, if I'm not wrong here. I'm trying to just make sure I say that right. But they had, it's M3 chip. So they had M1 chip, which was supposed to be amazing. Then they had the M2 chip, which was a lot faster. And now they're coming with the M3 chip. So they're going to introduce that in their new iMac system and their new software, which is great. But it's like, okay, so there's news that's happening. It might push it along. But what really is going on in the sense of, do we think these stocks are gonna go out high? Like, what's the technicals say? Because right now, it's like we don't really know which way it could go. We think it's gonna go down because we're basically saying whatever the Fed says, we think the opposite happens at this point.
Yeah, it seems like that's what the market is saying, right? Like whatever the Fed says, is we're doing the opposite. And so, even kind of looking at this, so I'm showing some charts here. Basically, I want you guys to understand direction on charts, right? If it's going up, that means the price is going up. So if you're reading it from left to right, back here in May,
video, by the way.
Yeah, this is Nvidia we're looking at. Back here in May, it was going up, right? And then it's been moving sideways for the most part, up and down. And then lately we've been towards the downside. And today they had a nice day after they announced some news about what they're going to do, and that's going to give Intel some competition. But aside from that, overall, if you were to look at a weekly chart, which is basically going to show you what happens on a weekly basis, meaning every candle, every little thing you see here represents 1 week. So over the weeks, we've been consolidating for multiple weeks now on Nvidia, but a lot of people think it's getting ready to come down. Now, a lot of you know that I trade, right? I don't personally trade chart patterns, but this is, another person might see this as a head and shoulders pattern. A head and shoulders pattern is a bearish pattern, which says that if you see this form where you have, this is the left shoulder, this is the head, this is the right shoulder, typically you see continuation more to the downside. So a lot of people do think Nvidia, first of all, this week and the upcoming weeks will be moving to the downside. So you have that. You have Apple, which does not look good as well. Apple does not look good. You see over multiple weeks, Apple has been dropping. And you see the same thing with Tesla. Tesla, this is what some people would call a double top pattern. Tesla formed a double top where you have two tops, and then once you lose the middle, typically you see more continuation to the downside. So people think Tesla is coming down as well. You know, Newski, you actually always, you know, somehow get the best prices on things. Like, you know, it's funny because, guys, I spent my whole day on these charts. I love these charts to death. Like, I can't even begin to explain to you guys how much time I spend on the charts, and the way I trade is very complex. But I'm doing all these complex strategies to get the best prices. And then I call Newski. I'm like, yo, Newski, I got Tesla coming to 180. He's like, oh yeah, I got a buy order sitting there at 180 already. I'm like, what's up with this guy? Like, how do you even, he does, mind you, he don't even look at charts.
I don't. I'll be honest with you guys, right? I really don't look at charts in the sense of like, that's his craft. I don't pay attention to the charts in that sense, but this is the way I look at Tesla. Like, my average cost, like whatever my average cost is on Tesla, if I see it hit that price, I usually buy back. Because I'm like, if it's at my average cost, I don't mind putting more in. I'm just not gonna put chunks in, because I think it could go in either direction at this point. But if I'm breaking even, I don't mind buying more if I believe in the company. So I bought more. And then I told Rel, like, yo, if it falls anywhere from 8 to 12% from my cost I just bought it, I will buy more. That just happened to be $200. And then again, if it falls another 8 to 12% below my $200 price, I buy more, which happens to be 180. So it just works really well for me personally, that anytime I'm looking at stock, I'm like, if I buy something right now, I want to do another 8 to 12% below that price if it drops, and I'll buy again. So it just has always worked for me. And I always recommend this to people, because look, if you're not good at charts and you don't see it in the way Rel does, if you don't understand head and shoulders, you don't understand certain things, and you really believe in the company wholeheartedly, you should buy more every time it dips. But you don't want to buy more just because it dropped to $2. You want to buy more on an actual percentage basis. And I think a 10% dip on a stock that you really believe in as a credible company means it clearly was a big drop. So it makes sense to get it at that time. It just happens to correlate really well with the charts. And everything Rel just talked about, like, bro, you talked about Apple. I think you just talked about Tesla, talked about Nvidia. It's like, yo, looking at all this, these are the Magnificent 70 we just talked about. And if they're not looking too good, it's like, what do you think is going to happen to the S&P 500? What do you think is going to happen to the NASDAQ? Like, you know what I'm saying? That's my fear.
Yeah, I mean, I'm in full agreement there. Like, you know, I'm kind of looking at the NASDAQ right now. And you see, we had a period where we were kind of moving sideways. Well, first of all, let's talk about the beginning of the year. I mean, this is 2023, y'all. And to be specific, look at the bottom, right? This is the bear market, right? And then we come here. This is January 3rd, down here. Bro, 2023 has been a run, a absolute run. Every candle represents 1 day. So you see, we've been moving one time frame. We've been moving up in one direction. Now we're finally starting to slow down, and people are saying, it's time to go back to the other side. Because one thing stocks don't do.
So what chart is this? Just to make sure.
Oh, that is the Nasdaq. So that may
So
be
basically,
Q.
because it was a little laggy and glitchy. Just go back to the start of 2023.
Oh yeah, for sure. So 2023 was down here. The start of 2023. This is January 3rd,
So
down in here.
pause right there. Zoom out a little bit. Okay, cool. There we go. So now show because it was a little laggy.
Oh yeah. So basically, this is the top of the last bull market we had, right? And then we go through 2022, and stocks drop. We all know this. Everybody experienced pain here, and then we kind of refused to make another bottom, right? We popped and didn't make a lower low. So that's the first sign that maybe the bear market's over, and we
Mm-hmm.
were absolutely right. As soon as 2023 started, we moved to the upside rapidly, one direction up. We barely had any dips. And then we're finally now in recent time periods starting to see some dips. And you may notice we came really close to all-time highs. So the all-time highs was right up here. We came very close to being up there.
We didn't
And
beat
then, but we couldn't beat it. And then now we're starting to find our way back to the downside. So people are getting scared, like, hey man, what if we enter another bear market? And there's a couple things you could look at to see that. I mean, the dollar typically, if the dollar is going up, stocks tend to go down. The
Mhm.
dollar has been rapidly rising since mid-July, rapidly. But and then now we're just kind of moving sideways. So I would say if people think that we're done with the drop off,
So it's like an
this
inverse relationship between the dollar and the market, basically.
yeah, there's an inverse relationship between them. And so basically, we just showed you that the market has been dropping. Well, look at the dollar. The dollar has been rising
Yeah.
because they're inverse. And then now, lately, the dollar has been consolidating. So we want to see if the dollar starts to move to the downside, then we can expect stocks to potentially to move to the upside. So we're definitely watching this closely. But other than that, it's like we're kind of in a big period right here where you have to make a decision as an investor. Do you want to stay cash and kind of wait to see what happens, or do you want to make a bet and say, yo, you know what, I think we're about to plummet to the downside? And that's a decision you have to make. My recommendation is we always talk about DCA, and this is just a time where you would have to DCA. I like Newski's method. Personally, I think the market will be
Only for credible companies. I do not like that method for random companies. I don't do that method for random companies. Just making it clear with you guys. Like unless it's unless it's the best companies. Like for example, bro, I think unless it's a Microsoft, unless it's Apple, unless it's a Tesla, Nvidia, like Magnificent Seven, essentially, right? Unless it's one of those, I don't recommend.
I completely agree. I actually really wanted to show this too. We talked about the Magnificent Seven and how they've been rising, and because they've risen, the S&P 500 and the Nasdaq have risen because the Nasdaq and S&P 500 have such a huge allocation towards the Magnificent Seven, right? They carry that market. This is IWM. This is the Russell 2000. So this is all the small cap companies. Look at the difference. Look what happened since the beginning of January, which is right about here.
Right there, yeah. It's been in a pattern. That's what I'm saying. It went up, down. And to be fair, it's not doing anything. It's right now, it's really trending down.
Yeah,
it's trending down, but like, it's like, yo, it doesn't take much for these markets to reverse. And my whole thing is with like the Russia-Ukraine thing, we don't know what's going on with that. With the Israel-Palestine thing, we don't know what's going on with that. We don't know when it's going to end, right? If there even is an end. And yes, interest rates are still high. And if the unemployment rate goes up, it's like, what happens then? There's fear in the market. So it's like all that together. And this is to say, like, guys, we're not saying don't buy the stock market. No, like, continue doing your DCAs across the board. But I think more so, if these companies drop, like right now, I don't think it's the time to buy these companies. Unless you want to do my method, which is like, you could buy a little bit right now and then continue to buy in a little bit across the board. You could do that. But it's like right now, it's probably the time to just DCA into funds, sit back and watch how these markets come back and look at what earnings tells us. Like, don't be in such a rush. Like, yo, markets aren't going nowhere. You know what I mean, bro? Like, they're not going nowhere. So you can wait for earnings. You can see how they react based off the earnings and then get your feet wet and be like, okay, let's see what goes on.
Yeah, I completely agree, bro. I'm waiting for earnings. I think earnings will be huge. Everybody's kind of looking forward to these earnings. We don't actually have the most bearish expectations on these earnings, but imagine if they kind of disappoint to the downside. They're gonna sell these companies really hard. So we got to keep real eyes on these earnings, because actually earlier this year, earnings had a really bad expectation. People thought earnings would be terrible, and they actually, beat earnings surprisingly. It surprised a lot. So what if we see the opposite this time, where right now they're like, all right, earnings won't be so bad in Q4. Well,
and we've been wrong all year, bro. That's the thing. Like the Fed, like we all thought, yo, market's gonna die this year. Market went up. Fed said no recession. Market went down. Fed said we're going back up. Who's to say we don't go down?
exactly.
None of this makes sense. I'm telling you, we are not the gurus of the stock market world. Like I was just having a conversation with Rel right now. I'm doubting my own portfolio all of a sudden now, because I'm like, am I making sense? Meanwhile, my portfolio is S&P.
The thing is, I don't want to say we, as if, not to take responsibility there, but I don't want to say we as if it's just back to it, because we're talking about people. People, economists, like everyone, no matter what show you listen to, what economists you listen to, everybody has gotten it wrong. For example, everybody headed into this year saying 2023 will be the biggest recession since 2008. What recession? You know what I mean? Nothing has happened that everybody thought would happen.
When they called the recession, when they called no recession, we're headed towards a correction. It's like, what? That don't make sense.
Yeah, it don't make no sense, bro. You know what I mean? So let's just see what happens.
Facts. But this was a little bit of a longer episode. We want to, just have a conversation and just base it on what we really truly think. So we want to know your thoughts. If you're still watching, thank you. We definitely appreciate you. But comment your thoughts below. Also, make sure you like this video, share this video with your people, subscribe to the channel, and hit that little notification bell, because we drop
2 videos a week,
and you do not want to miss them. Make sure you check us out on Wednesday. But until then, peace.
Peace.
Soundstripe.